You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That tune means it's time to rock out with everyone's favorite bi-weekly option show. It's time for the option block. My name is Mark Longo from the old OptionsInsider.com, which is, I say old, because we're in the process of revamping it. So if you get over there and you see a link isn't working or something else is not coming up or the archives pages aren't loading the way you hope, we're in the process of fixing all of that. And we thought, rather than just tweak here or there, it's gonna rebuild you brand new. Because in January, it'll be our 12-year anniversary, which is just horrifying. We've been doing this so long, but we like it, I guess. And you guys tend to like it too. So we thought, what better way to celebrate than just let's do a brand spanking new version of the Options Inside. I think we're on version, I don't know, I lose track, 5.0 maybe now, something like that. It's been many iterations over the years. So look for a brand spanking new one. Coming soon, all new bells and whistles, all new functionality, all new cool stuff. If you have something you'd like to see on the new Insider, let's call it 5.0. For lack of another one. If you have a suggestion for what you'd like us to include, some new functionality, some new thing, now's the time. We're building it now, so hit us up. Excuse me. Questions, comments, suggestions for web design. I know you all got them. You're always hitting me up. How about this? How about that? Send it in. Let us know. If it's feasible and interesting, we may just do it. So hit us up now if you have suggestions for what you'd like to see on the new Insider for 2019. And of course, you guys can still join us as always. One of the things we're looking to do is try to bake the live into the website a little bit easier for you guys. You can go straight to the website. Right now, you kind of have to grab it on social or go to the Mixlr and get notified there. I'll try to bake it in, maybe have like an on-air thing going on the website there, which would be kind of cool. You can just click on it. Bam! You're listening to whenever we're live, which will be kind of fun. So look for that kind of fun stuff coming soon to the new iteration of the site. Meanwhile, you can still join us by all the old usual ways, including live every Monday and Thursday, noon Central, 1 p.m. Eastern, via ye old Mixlr. Same link, that won't change. We'll try to add some new outlets maybe in the future, too, trying to figure out how that would work. A lot of them require video, like your Facebook watches and your YouTube lives, and we all know how hard it is to get everybody on audio, let alone on video. We'll see. Maybe we'll play around with that, too. All sorts of fun stuff in the offing. And as always, your questions, comments, concerns, always welcome. Send them in. You know how to hit us up. And joining me, how to break down this kind of weird, choppy day in the markets today. We got, first off, let's go out to the hinterlands, that peaceful land known as St. Charles, Illinois, where we are joined by the man holding down the fort at St. Charles Wealth Management, Uncle Mike Tusa. Uncle Mike, welcome back to the show, sir. How are you enjoying this chop?
Every day's a holiday. Every meal's a feast. It looks like we have a trade deal, maybe. So everything is awesome, maybe. Who knows? We'll see. Lots to talk about today.
Good day, I think, to enjoy some fine chopped salad. I think at your nearest purveyor of fine goods, and also joining us to discuss this just weird activity we got going on today. A little bit up, a little bit of down, a little bit of sideways. We got the greasiest of meatballs doing double duty this week. Mr. Meatball, how's it going, sir, in the land of OptionPit.com by way of Carmen Line Capital?
Oh, it's a beautiful day in the neighborhood, a beautiful day in the neighborhood, a beautiful day for a neighbor. Would you be mine? Could you be mine? I've always wanted to live in an Options Insider neighborhood, just like the here.
I don't know if
Let's
I'm...
make the most of this beautiful day.
I don't know if I'm the material for the town that changed America. I prefer my areas a little bit more, shall we say, jam-packed with humanity, like the heart of the maelstrom that is downtown Chicago. But to each their own. You choose Uncle Mike chooses the quiet hinterlands. The Rock Lobster chooses an island in the middle of nowhere off the shores of Maine. You choose the town that changed America. To each their own. Let's see what the market has to its own today. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Let's get to it. Let's break down what's trading, what's lighting up our collective screens today. You know, it's been one of those crazy weeks, a bit of a mixed, quiet day after a bit of a crazy week. You know, the week started off, as we were talking about earlier this week, kind of off with a bang to the downside. S&P hitting an 8-month low, those renewed Apple concerns. You know, as Apple goes, so goes the market. Whenever something's hitting Apple, on Monday it was, of course, the concerns about the initial headlines were China bans iPhone sales. We all saw later on there was a little bit more nuance than that, but still. The initial headlines sent people into a tizzy. They were slamming Apple. They were slamming the market. S&P hitting an 8-month low. Today, we're kind of off those lows and rebounding a bit and kind of mixed, actually, coming into today's session. We're seeing the Dow up ever so slightly, giving up some of that upside a little bit now, but still up less than 1/10%. S&P off ever so slightly, down about 0.2%. NASDAQ feeling the lion's share of the downside today, off about half a percent, I should say, not half a handle. So a lot of kind of mixed, a lot of kind of shrugging of the shoulders today. We're seeing Tesla up nearly 2 handles, about $6. That's kind of a rounding error for that one out there. Disney up about 1/3 of a point. Apple up about a little over a handle, hovering right around that 170 level right now. So not exactly threatening that 150 level, but still one that's more in the radar than it was before. Ford right around 8.5 right now, down about a dime or so out there, a little over 1% out there as well. So again, a mixed bag, depending on where you're looking across the market, which sector, which area kind of catches your eye. VIX cash hovering around the 21 level, pretty much off of not even half a handle over. Let's see how much do we move. Intraday, we got up to 21.32, so not a huge range day here in VIX cash land. So let's start. Let's start with the meatball. Why not? Because it's just fun. Mr. Meatball, sir, it's been a lot. We obviously started off the week with a bit of a bang. Then things maybe settling out a little bit today. We're kind of feeling our way along. What's catching your eye in today's activity, sir?
You know, it's been just kind of a wishy-washy, weird day, right? You know, the market is kind of up nicely on the open, kind of giving it away now, kind of washing around. We've now had kind of 3 days in a row of just mealy-mouthed, soft stuff coming from the market. It doesn't seem like it has any idea what is going on, what it wants to do, or where to go next.
I love your technical terms, mealy-mouthed, soft stuff.
Yeah, you never heard of mealy-mouthed, soft stuff?
From the markets. You know, is that in line? Does that come before or after the S&P death cross? How does that work?
It's right around this death cross.
And is it after quad witching or before?
It is after.
So you get the mealy-mouthed, soft stuff after quad witching and before the S. I'm just trying to make sure I know where it falls.
Yes, you now have it.
And is it on the Fibonacci curve? Does it fall there as well?
No, only candlesticks.
Oh, candlestick. I got it. Okay, no, I got to know where your technical indicators
Never heard
fall.
of the mealy-mouthed index?
I'm going to start following that. That sounds like one I think I could get behind. You know, I think let's get some love for that one. You know, because at the end of the day, all that matters for an indicator, right, is how many people use it. So if everyone follows the mealy-mouthed indicator, I've often said you could have the bananas and bread index, and somehow that relates to the S&P. And if enough people buy into it, it's going to work. So there you go. That's my 2 cents on technical analysis. Before I get everybody else mad at me in the technical land. Let's move. Uncle Mike, sir, you're kind of a resident chartist. First off, are you offended? And then B, what's catching your eye in today's activity, sir?
How come you guys always make me the resident chartist?
You're a resident Apple guy, resident bull, resident chartist. You're the resident whatever we need you to be.
Yeah.
Resident ISIS supporter, all these things, you know?
You are what we thought you were.
Oh, my goodness. More like I am what you say I am. Got it. Well, being the resident chartist and the resident bull, from the standpoint of leverage, I feel this market is I think Mark described Tesla this way a few weeks ago, and I think that's kind of how this market is. If you're looking to lever yourself, it's a market for crazy people. And I don't know if it's really the right thing to do right now to get involved in this market if you are levered and being a short-term trader. Now, with that being said, I own out-of-the-money calls in this right now, and I've already closed out part of a short or most of the short stuff on a butterfly. So it's relatively cheap, but I'm doing it with small amounts of money. So that way, if we do get a big pop in this marketplace, then we'll benefit. I and my clients will benefit. However, if not, I have a lot of money on the sidelines right now. And that's what I think the prudent thing to do is in markets like this. Now, if you want to own stocks for the longer term, I think this is a phenomenal market to sell some puts in if you're looking to own a stock for the long term and you're prepared to be put the stock. But once again, though, if you're looking to be levered, this is a pretty tough market to do any type of leverage in unless you're doing smaller amounts of money in that you can afford to lose great amounts. Great amounts of small amounts of money don't equate to much. So just have that in mind when you're trading in markets like this, because the beauty of options is that you have limited risk. And so if you over leverage yourself, you can have a lot of problems. However, if you use the right amount of leverage for your portfolio, this can be a phenomenal opportunity in a lot of ways, depending on what way you want to play it. Bottom line is that I don't care how good your technical indicators are, fundamentals, whatever, risk management needs to come first. And in markets like this, great risk managers can come out pretty well.
So just to summarize here, Meatball says this is a market full of mealy-mouthed soft stuff, and Uncle Mike says it's a market for crazy people. So we got a lot of wiggle room in the middle there for us to explore here on the program today. If you're wondering what's lighting it up in the option space, let's see. Even though it's a choppy day, still seeing some paper, not a ton. SPY putting about 1.6 million contracts on the tape today. These are options, obviously. The ADV is about 3.4, almost 3.5. So we're coming in just slightly less than half of that there right now. VIX, 332,000 contracts on the tape coming into showtime there. Their average is about a little over 600,000 out there right now. So also kind of similar, right around half out there. In terms of underlyings, what's lighting it up? We got, Apple bumped off the top spot. Number one actually coming in, GE, 404,000. I wonder what could be lighting it up out in GE. Calls, 179,000, 225,000 puts on the tape. I think we'll get to that in a little bit, listeners. GE taking the top spot, 404,000. Maybe someone deciding to take some profits off ye old table there. Apple, number two. We don't see that too often. Excuse me, 338,000 contracts on the tape there. Number three, Bank of America, 266,000. Number four, AMD, a distant fourth, 135,000. Number five, Merck, newcomer on the top 10. I haven't seen him in a while, with about 129,000. Number six, good old Citi, 113,000. Number seven, ye old Tesla, 111, tied for number eight with Amazon, both at 111. Number nine, Facebook, 108. And number 10, Softy. So a lot of the top 10 kind of stays the same. This kind of goes back to what we've been saying in the option space for a while. A lot of concentration in a handful of names. But it's nice to see a little bit of mixing it up. GE mixing it up, certainly. Also seeing Citi, Tesla rising up a little bit there. AMD getting up there a bit as well. So interesting. Merck popping his head in the top 10. Interesting to see a little bit of shakeup there in the old top 10 here. Looking at earnings really quickly today. After the bell, what do we got? We've got Costco and Civitas and Adobe. Good old Adobe. They have Creative Cloud and everything else out there. Before the bell, we had Sienna, DLH. Obviously, we're kind of coming down to a bit of a slowdown in earnings season now. The holidays coming in. Not a lot of folks looking to pop off their earnings call right around Christmas. So it's kind of tailoring off. Tuesday, we had Dave & Buster's and American Eagle if you didn't get enough of the retail side or the gaming side, like we were talking about earlier on the show. Vera Bradley on Wednesday, and today, like I said, Costco and Adobe. Let's see if we got any. We do have a new, actually, earnings move results report on the website. These are from our friends over there at ORATS. The one they broke down here is, let's see, what are they breaking down here? This is Sienna. Ticker symbol CIEN. They're trading 34.5 right now, and they were pricing in. Let me see. They're before the bell today, actually, and they were trading 32 going into the day. They were pricing in about 277. They moved about 317, so not a bad day. Let's see. Sienna right now is about 34.48, up about 235. So pretty much in line with what they were predicting there. You can find more of that stuff over there. Excuse me, on the optionsinsider.com. All right, let's look here really quickly. Let's see. All right, let's keep rolling. Let's get into some of the odd stuff. It's time to open up the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's get weird. Let's get wild. Let's get whimsical here on the old odd block. Let's kick things off as we like to do here in the land of Tesla. This one today, like I mentioned before, up slightly on the day. Let's get the most recent number here. It's actually looking a little bit stronger now. Up 7.25, up nearly 2% now, hovering right around 373, almost 374 here. And what we like to watch out here in Tesla land is, of course, the downside, and the 50 puts are lighting it up kind of across the board. 1,000 lot here. The 50 puts in Jan going up for another 3 cents. We also got the March 50 puts lighting it up for 37 cents. Haven't seen the March going up 1,000 times there as well. Even got the Jan 2020 10 puts going up for 28 cents. So the 10 puts still not out of favor, just going out a little bit here. You can see the 40 puts, 45 puts, 2 cents, 3 cents, 500 at a time. So yes, the downside is still lighting up. Big blocks of 500 across the board. Could it be some people trying to get the heck out of Dodge with that size OI there, or some people deciding to pile in? Either way, Jan's approaching now. So these puts that seemed so distant, so crazy speculative, so long term, not too long ago, now are coming home. So we shall see. I think Tesla can go from 374 roughly to 50 in the span of a month and change. It would be an epic downturn if it did happen. But then again, crazier things have happened. No one said Enron can get down below 10, and then it did. So the crazier things have happened in the past. We shall see if a Tesla can maintain. Meanwhile, let's go on, Mr. Meatball. I know this one's been on the Rock Lobster's radar for a while. I talked about it on the show a few weeks ago. One of the reasons, of course, that GE is lighting it up today is because there's a big put trade coming on the heels of a big trade we saw a few weeks back. Do you want to break down for our listeners, sir, what we saw in GE and how why our friend is smiling out there today, sir? At least on the option side.
This was that huge GE puts that they bought that are now deeply in the money, and with JP Morgan's call, they decided to call it a day. They basically agree with the analyst at GE or the analyst at JP Morgan and think maybe the stock's done tanking, and so the stock is up. And so they said, well, I don't want to lose any more money, and they took off the trade. What was the exact strike? I forget. Was it the 9s?
The 6 puts I have here for 19 cents,
Oh, yes.
330,000 times.
Yes, that was right. And, you know, they were 1 day late in taking the whole thing off. Otherwise, they'd have been perfect. Because it's up nicely today.
They're still, I mean, obviously they have other legs on, and so we can't speculate on that. This was probably done against something else, shall we say? But just on the pure options component, you're right. They missed it by a day, but still looking pretty good. 19 cents. What are these bad boys looking at now? They're around like $1.40 or so for these puts. I believe these are the right ones. Yeah. So you're talking not bad. $1.20, 330,000 times.
I'll take that.
That's not bad. It's roughly 40 million. My quick back of the napkin math
I believe that was GE's pension that was doing that.
I would think so. It's got to have someone who's got some skin in the game doing that sort of thing. But yeah, still, 40 million for the GE pensioners. I guess there are worse things to have, right? And the nice thing is they actually took it off. You know, they didn't just let this go away. You know,
yes,
that would have been the sad part of it. How many times have we seen? I know this is a big bugbear for you, Mark, where people do all this work, they spend money to put on a hedge, and it actually works, and then they do nothing with it, right? And then it goes away.
With it. And what's the point of hedging? That.
I guess at that point, it's really only psychological, right? That's what you're doing. You're just making yourself feel better that you're hedged.
Correct.
You did the right thing, but you're not doing anything to take it off.
You did the right thing, except you didn't do anything of it once you were right. Good job.
So this guy gets the Good Job Award, and certainly near term, one of the biggest winners we've highlighted in Profile, just size money-wise.
Yeah.
I mean, it's 330,000 contracts. If it ticks a penny in his favor, it's going to be a big winner. So if it goes $1 and a change in his favor, that's going to be a big size winner. So this may have to be our size winner of the year here for the odd block. Again, he's got other stuff on against it, so nothing is written in stone. But still, the fact that he took it off, he missed it by a day. C'est la vie. There are worse things to happen. Yeah, it looks like a bit of a savvy pension fund. They actually play in the options. How often do you see that? You know, we go to all these conferences, things like risk management and others, and the whole purpose of the conference is, why don't more pensions use options? And here's a big one doing it, and doing it to great effect. So we should salute these guys.
Doing it and doing it and doing it well. Like LL Cool J. Good job, pension fund.
Well done. The only thing they could do better is perhaps call up Carmen Line to consult with them on how to effectively put on their hedges.
You know, I was actually doing just that yesterday. I was working with an individual, helping them build a hedge around a concentrated stock position. And lo and behold, they wanted to use options. How smart.
You know, there's a reason why our advisors options show the biggest market is San Jose. Go figure. It's not Chicago or New York. It's because that's where all that concentrated tech wealth is. And they also have a bit of a history of options compensation out there. So the two are not exactly mutually exclusive. It's not a dirty word to say options out there. People like it. And then their neck of the woods. Concentrated wealth and options, they tend to go hand in hand. Speaking of hand, let's see what else is lighting it up. That's going to be hard to top that money-wise. Let's see what we can do here instead. Our Eye of Sauron, always scanning like Roz from Monsters, Inc. We're watching, always watching. So even little ones don't escape our gaze on a day like today. Let's go out here to THC. THC, you might be saying, oh, this is some sort of cannabis name. And you'd think that, but no, it's actually Tenet Healthcare Inc. This is, of course, a multinational healthcare services company. They have a bunch of surgical facilities and everything else. Even though their ticker may imply other things these days, that's not their bread and butter here. Trading today, excuse me, 23.65. I still got a bit of a cough, listeners, in case you haven't told. Much better than I was on Monday, though, so I can hold down a show again today, which is nice. Just a little bit of an old frog in the throat left. 23.65, like I said, up about 40 cents or about 1.5%. Let's get out here to what we saw out here. These were the Jan 25 calls expiring, for 560. These are Jan 25 calls for 560. It's like paper coming in to sell these bad boys here on the bid. These things were 560 at 580, fairly tight for these, and hitting the bid, doing it 3,529 times. This is opening sauce. Let's see out here. I said these are slightly out of the money. So this has the look of what appears to be a nice, slightly out of the money covered call, right? Probably here. in THC. Let's go out here and let's see how this thing has looked over the past year. In the past year, it's kind of had a nice run. A year ago, it was trading about $14 even, so nearly 10 handles lower than where it is right now. Excuse me. And then it got as high as to about threatening 40. 39 3/4 or so back, and looks like that high was around the July, August, midsummer time frame. And then it kind of sloughed off a little bit back down to the mid to low 20s here. So we're still about 10 handles higher than where we were a year ago, but also about 14 or so handles off of the recent highs, 15 actually, of the summertime. So kind of a nice mid-range here, kind of a pick'em as to where this name is going to go. Is it going to go back down to where we were trading a year ago? Or is it going to go hit back up in the highs? Maybe it's going to hover here. It's like our friend here is wagering that's going to hover right around here for the not too distant future here. Doing this for, let's see, $5.60. Let me just pull up really quickly here. I want to pull up the options chain on this bad boy, just to see. I want to look at all the months. There we go. These are Jan. That's right. I thought these were. These are Jan 2020. So these go out a year. So that's why they got that much meat on the old bones. Listen, you ever see something for $5.60 with a month to go? That doesn't make a lot of sense. So it's got to be, these are Jan 2020. Jan 2020, 25 calls. So that changed the narrative a little bit. They're tying up capital for a year and saying that this bad boy is not going to move a heck of a lot north of 25. If it does, they're actually happy to sell it out right around 30. I've seen crazier trades. Mr. Meatball, what do you think about this one? What do you think, first off, about the notion of 1 year covered calls? Are you a fan? And then B, what do you think about this one in particular?
I think there are more effective ways to build a covered call strategy than year covered calls. But, maybe, it's got a little bit of a set it and forget it feel to it. That's not so terrible. THC, my guess is that if we legalize pot, they're going to have to change their
or maybe they'll catch a nice rise just off the love of it, right? And they'll get a boost.
No, it'll be Altria's new
before anybody figures out what the hell they do, that they'll get a 10% rally, and then they'll plunge.
Yeah, no kidding. What was
the stoner crowd? They're known for their due diligence, right?
Was that Riot blockchain, where they were literally rallying because they had the name blockchain in the name?
I think so, yes. So yeah, maybe that's why they're keeping the ticker. They're hoping, fingers crossed, they catch the cannabis wave and then they don't ride it back down again like some of those other names have of late. Yeah, I'm with you. We see that a lot, especially in the asset management side of the space. They're busy. They don't want to deal with it. They kind of want that set it and forget it approach. So 1 year covered call, bam. Set it and forget it. Yeah, I'm with you. There are better ways to maximize it. Uncle Mike, you're an advisor who manages people's money out there. What do you think of the 1 year covered call approach, sir?
I'm not a huge fan. I like the 1 year collar approach. In terms of the
you like 2 year collars. Don't lie to the people, sir.
I like those too, but I do think it's important to do stuff unless you can't.
They may have holding period restrictions too, Mark, that would be a reason to use a longer dated covered call.
Yes, that's true. There are other rules of engagement in the asset management world that smaller retail don't have to deal with, which would necessitate a longer holding period. So we mock sometimes because we love, but I get it. Sometimes they can't. They don't have the wherewithal, either the savvy, the options wherewithal, or the time, or maybe all of the above, to manage, let's say, a monthly call right as opposed to a yearly. So they do it this way. They write this. They get their guaranteed out at 30, 60. If it drops below, they get the 5 handles. They're happy with that. Set it and forget it. Move on to the next trade. I see the logic of it, even though if you listen to this show that you could do it a lot better. If you roll your own here instead. Let's keep rolling on to our next name. Who we got here? The Eye of Sauron, always watching. Ramp. This is a newcomer, I believe, to the Odd Block. This is Liveramp Holdings, but you may know them better by their old name, Axiom Corporation. Liveramp Holdings, formerly known as Axiom Corporation. This is a San Fran-based identity resolution platform. Provides identity resolution services, data onboarding, and the transfer of offline data online for marketing purposes. That sounds vaguely Orwellian and sinister, but there we go. That's what they do here. $44.40 off about 70 cents or about 1.5% today. Let's see what's up out here in Ramp. Once again, going to Jan, this time regular Jan, not Jan 2020. And it seems like we got our old selves, the old straight up out of the money near term call buy. Seems like this is Odd Block 101 here. We got 3,000 of the Jan 50 calls, excuse me, going up for 70 cents. These things were pretty wide, as you might imagine. Not a lot of paper going up in Ramp. 45 cents at 80. These things went up for 70 cents. So quick back of the napkin analysis, looks like they're buying those bad boys. They got them. They save themselves a nice dime. You're doing 3,000, you'll get that. 70 cents for these things. Looks like paper buying. This is opening paper done on the Philex. Not a lot of OI really to speak of here. Let's look at Ramp. Let's check out formerly known as Axiom. Always a good sign when they change their name, right? Worked for Philip Morris. So there's an identity company that recently changed their name. Could they be up to dubious things? Who knows? Who knows? I'm not smearing. I'm just conjecturing here. Let's look here at the year that's been out here in Ramp. A year ago, they were trading a little bit shy of the 30 handle, about 29, 28 and change, looks like. So they're quite a bit lower than where they are right now, about 16, almost 17 handles lower than where they are right now. They're low, actually, of this period. It looks like they dipped down to 1860 over the past 52 weeks, which is substantially lower than where they are right now. Then they got as high, looks like in the summertime, they hit their peak around July or so of 51 and a half. So they're well below that now. They're about 7 handles below that, but still way up from the 18 level they hit somewhere in the past year. Looks like that was close to, this doesn't show on this chart, but looks like that was probably around the maybe April time frame. This chart doesn't show the 18, even though it does show the 52-week low of 1860, which is interesting. But let's see here. So 1860 to 51.5. Now we got some call buyers coming in, Mr. Meatball, at the 50 level, going out a month and change. So going out to Jan 50, the stock 44, almost 45 right now. Paying. Let's see how much they paid. 70 cents for these bad boys. So they need this thing. They need this thing to get going here. What do you feel about these bad boys, sir? The old odd block special. Near term, out of the money call love. What's your spidey sense telling you about these Ramp calls?
It's probably some sort of income play. I mean, that would be my guess. And that's not a very popular play.
I think they're writing these. That would be a better look, I would think. They got a good price if they did write these. They sold them for 70 cents.
Yeah,
that would be.
I don't know if that. I mean, I'm not sure whether they wrote or.
That means they found some desks to step up and fill them at 70. That's an impressive broker. I'd want to use them. Yeah,
well, they're probably paying through the roof.
Yeah, that's true.
But you never know. I could be wrong. It could be. It could be a. It absolutely could be a. What's it called? A buy. So.
I like it better as a covered call, so I would look at it more favorably that way. So let's be charitable. Let's assume that this is a covered call and that they have a great broker and they executed them a dime off the offer to sell these things. In which case, well done to you folks out there in Ramp, and more importantly to your broker. You should use them again. Whatever you're paying them, they made it worth your while there. I probably think they're buying these, but hey, let's be nice. Let's be nice. What do you guys think? I like it better the other way though too. So let's be nappy. We're coming towards the end of the year. It's a feel good season. Let's be feel good here on the odd block and assume that all is right with the world and that they're right in these bad boys and everyone's going to be happy in a month and change, rather than sad and weeping over 70 cents lost 3,000 times. All right, let's keep on rolling. It's Thursday. It's time for you folks to dive in and take the reins. It is time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. It's time to get maily here. What was that old Blues Clues? Mail, we got mail. Something like that. I forgot how it goes now. Mr. Meatball. You know the Blues Clues mail song, Mr. Meatball?
I don't. that I thankfully none of my kids ever watched Blues.
I figure you got younger guys than me, so maybe they're back into the old. Maybe Blues Clues is back again. I don't know. It had a good run there, but yes, none of us were all laggards when it comes to our Blues Clues song knowledge. You guys aren't laggards though when it comes to playing along in our polls. Go figure. You guys like yourselves some speculating on the old fruit company. Because that's what we got rolling again here this week. You got a couple days left if you haven't voted. At Options is the place to make your voice heard. As always, folks, let's start with, what do we got here? Let's see. Let's go, our Apple poll. Here we go. The open interest, again, Apple, popular name, OI, always very high. But a few positions are dominating the roost right now. Again, these were calculated as of when this poll went live earlier this week, so they could have changed. I don't think they have. But we're keeping this as the data from earlier this week. So that's how this was constructed. Gave you 4 choices. The Jan 2020 200 call. The regular Jan 250 call. The Dees 180 put, so straight up Dees in your face, down, actually now in the money put. Or the straight up regular Jan par put, which is a distant level there. I see the numbers here, but I won't lie. I won't give you guys any hints. Uncle Mike, we'll start with you. If your Skype gods are smiling there in St. Charles, I know what you voted on earlier this week. Is your vote still the same? I think you were the Dees put. Have you changed your mind, sir?
I have not changed my mind. I stand by my vote. That's my story, and I'm sticking to it.
All right, 1 vote for the Dees 180 put. Mr. Meatball, I think you were the Jan 2020 call, or have you changed your mind as well?
Yeah, I like I've changed my mind to that Dees put.
Dees 180 put, huh? Interesting. Interesting. I could give you guys the answer. Instead, I will type it into the chat while I don't give an answer to our audience yet. Our audience is actually picking right now in our poll. The Jan 2020 200 call is leading the roost with 39%. Followed number 2 by the put, the Dees 180 put with 26%. 20% for the Jan 2.5 calls. Looks like the Jan par put growing in favor a little bit, up to 15%. The number's evolving, but the Jan 2020 200 call seems to be leading the charge since the beginning. If you guys think it's differently, you want to change those numbers, head on over, add options, make your voice heard. You got a couple days left to do this. We will reveal the actual answer tomorrow, listeners, on Volview, so you got to tune in then to know. But in the meantime, here we go. I'm getting... My savvy producing staff is getting me the Blues Clues song as we speak. It's like, here's the mail, it never fails. It makes me want to wag my tail. When it comes, I want to wail. Mail. There we go. That was it. That's what I was looking for. See? Our savvy research team. Crack on the ball here at the Options Insider. I knew there was a savvy song to be had there. I didn't sing it, but, still recovering from a cold, listeners. You got to cut me a little bit of slack. What do we got here? Comment from our buddy there in the chat, Austin41. I think this was from the last show. He said, good shows today. The experienced and animated host make it very entertaining and interesting to listen to. Well, thank you very much, Austin. You are clearly a man of discerning tastes. Animated, I like that. I try to get up. Sometimes I got the Rock Lobster. He's kind of down in the dumps, or you never know. Maybe Nick on Twifo. You got to lift him up a little bit. So it is my job to kind of be the center point here, the big cheer for a reason. You got to keep things flowing. So I appreciate the love there, Mr. Austin. Bjorn L asking. Are you still liking Apple 150 puts here? I think this is from our last show, maybe a week ago. I think it was the Rock Lobster who was saying he was a fan of. This came from our listener question last week. Our poll. We asked you guys if you wanted to. I think the stock was around 175. We asked you if you wanted to sell or buy the 150 puts. They were around $1.65 at the time, or the 200 calls, which are around $1, I believe. We asked you if you wanted to buy or sell. The lion's share of you wanted to sell those puts. I think the Rock Lobster was on board with selling those. I think you, Mr. Meatball, you were not a fan of those. So since the Rock Lobster isn't here, I'll let you go. Are you still liking, or perhaps in your case, not liking selling the Apple 150 puts? Or maybe would you prefer to buy them, sir?
The Apple 150 puts, I'll tell you why I don't like them. As a single trade to kind of collect, I think that's fine. The skew is really steep in Apple. Vol is high in Apple. But I just think that there are more effective ways. I like selling it if you're doing something with it. Like let's say you're, buying an out of the money call. You're doing some sort of, risk reversal-y type thing. You're using the puts to then do some sort of leveraged front spread or something like that. I just think there's better ways than just the straight naked call. But that being said, it's not the worst thing I've ever heard of. I could deal.
Mr. Uncle Mike, you were our resident Apple bull. You've kind of gone on record since then saying you're not as much of a fan of Apple. Is the 150 level enough to attract you? And if so, selling these puts, does that attract you? What are your thoughts on Apple at the 150 level and or selling or maybe buying these puts?
If I had to pick, I'd be a seller, quite frankly. But for me,
if I had to pick, I would be a seller too. I agree, Mike.
But with that being said, I view Apple as a good long-term holding for your portfolio. So if you want to get into it, selling a 150 is not the worst thing you can do. For me to want to go crazy on Apple, and episode 3.
We're losing you a little bit, Mike.
It's not so much about the price of it; it's more the innovation index. If I feel they're going to change the world again, then I'll get on board. But until they can do that, I think it's just a good company that's a good long-term holding. And if you want to get in at 150, it's not a bad idea.
So yeah, innovation index. Maybe that's regardless of the price. So if you're not sold on the innovation turning around, maybe that level won't be enough to turn. Maybe you're like the meatball. If they hit that level, it's more concerning for you than an opportunity. But either way, intriguing stuff. Speaking of Apple, we got our buddy Mark Brandt there in the chat saying he bought the Apple 8-day, 15-day calendar straddle. So I'm guessing he's buying the 15-day straddle, selling the 8-day. So doing effectively a weekly calendar swap here for $140 on a nice streak with this strategy, a multi-bagger profit potential if you get lucky. I have come to favor these plays that have big upside, plus expected value plays that have big upside but uncertainty per trade. I don't know. Calendar straddle swaps. What weekly calendar straddle swaps, Mr. Meatball? What do you think of that strategy?
I've seen worse. I've seen better. I've seen worse.
So it's not blowing your skirt up.
I get it. I think there are probably some ways that you can effectively. That these can be used. Right now, the problem with calendars is that vol's so high that, it's really difficult to own long-term premium. The only thing you really have going for you is that, front-facing, term structure is really, really steep. So that works to the trade's favor. That's about it.
At least not going too far out, so he's only going
right.
like 2 weeks, so he's not getting too deep into the weeds there. If you can deal, there's a lot of moving parts to that trade, listeners. You just think of just doing your regular calendar. That's enough for a lot of people to get dizzy. And then all of a sudden you add the straddle component to it. So you got 2 strikes, you got calls and puts, dogs and cats living together, mass hysteria. But if you can handle all the madness therein, I guess the meatball put it well. I've seen worse. I've seen better. I've seen worse. I haven't really done the analysis on that enough to think. I'll have to think about that a little bit. You don't see a lot of calendar straddle swaps. I like it from just it rolls off the tongue. I like it. Let's see here. What do we got? Max Lee. He wants to know, what do you think about stock replacement in SPY here? And if so, how far out would you go? A lot of people got stock replacement on the brain these days. I guess it makes sense, what we're seeing out here. Particularly earlier this week, we saw S&P hitting 8-month lows. We saw a lot of low levels, seeing low levels in names like Apple and stuff. So these are times when people are thinking about value judgments and whether this is good times to be getting in. And stock replacement is a way to do just that. So I could see why these inquiries have ticked up over the past month or so. Uncle Mike, you're kind of our resident spy guy. Spy guy, I like that. Your new name, Spy Guy. What do you roll with a lot of stock replacement in SPY? This is usually a strategy we see for single name equities. We don't see it as much in the big indices, but it still works. It still applies. It's just not as common for a variety of reasons. Mr. Uncle Mike, do you ever roll with stock replacement in SPY? And if so, and if you were to consider it now, how far out would you typically go?
Well, I mean, yes and no. I would say I base my whole life on stock replacement of SPY. And by the way, I love the name Spy Guy. I think that's awesome.
New Spy Guy. That's a new title for you. I like it.
For sure. But I mean, I think you can do it like the traditional way with which to do stock replacement is to buy a deep in the money call and then maybe finance it with selling some calls against it in a shorter term month or week, whatever the case may be. But I think that right now, or what I'm looking at right now, out in the opening segment, I think it's a great opportunity to maybe buy an out-of-the-money call spread with a smaller amount of money and just manage the time decay on it by selling other premiums or something along those lines. You're not going to replace it delta for delta if you do one contract for every 100 shares. So keep that in mind if you're doing it. But I think that the way to do it right now is to just do an out-of-the-money of some sort, but have the ability to do stuff, whether sell a small put spread or sell other calls against it or things along those lines. Right now, I think it would be difficult to buy a deep in the money call as a stock replacement because premiums are relatively higher, and you could still do it. I still think it's a very viable thing to do, just not my choice at this stage in the market with volatility as high as it is.
Yeah, I'll have to go check. I know Brian on Options Playbook, he often talks his fig leaf, which is stock. I think he does it on SPY a few times. I'll have to check and see if he's done any breakdowns for SPY lately. I know he does it on single names a lot, not too much about SPY, but it's an interesting idea. And yeah, the theory all holds. All of the benefits are still there. And if you can get into the fig leaf aspect, which is selling the near-term covered call against it, it's even more attractive, obviously. I don't typically, just rules of thumb, we see a lot for stock replacement. It varies on person. I typically like around the 6-month time frame, but everyone's got, different approaches to it. Some people will go out a year. Some people will go super crazy, go out a couple of years. I think you're paying for a lot of stuff you don't need at that point. I'm not a fan of that approach. Your delta's also going down, so your stock effectiveness is going down at that point. I think 6 months is kind of the sweet spot, but I could see an argument for out to the year. I won't hold it against you, depending on where you're going. And also, the delta range is going to change by the person. I usually say ballpark somewhere between 65 and an 80 delta is usually where the stock replacement falls, but it could go outside of that for a variety of reasons. So somewhere in that 6 month, 65 to 80 delta time frame, I think is a comfortable sweet spot for this. And if you like these SPY levels here, you want to get in at it, stock replacement, not a bad way to go. Mr. Meatball, are you a fan of stock replacement and SPY? I know you like SPX more, so if you want to swap in SPX instead, you could go for that.
I think it's a great idea. I think SPY is great for wheel trading. It's great for stock replacement. It's great for leaps. There's all sorts of good reasons to be using SPY. I think it's a great, I think it really is great at what it does. And I would encourage anybody to, I like it better than, I always ask, why bother owning the stock? SPY, there's some tax implications that are, maybe make it a little worse than something like SPX. But generally speaking, if I can produce income and do some stock replacement, synthetic covered call type stuff, why wouldn't I? It's way more efficient, and people don't think about it this way, but you are also buying yourself a floor if the world ends. That's actually something that people think about is like, oh wait, so if the underlying completely tanks, I'm only eating it. I'm not eating it and wearing it and drinking it.
Exactly. The downside is where that trade really shines, right? Because it's you got all the Greeks kicking in your favor in that point. Vol's going up, delta's going down, all the good things you want when you're losing money. You're losing less of it at a much lower pace. So that's if you got to lose money, that's the way to do it. We like stock replacement. Again, check out Options Playbook. Brian does a lot of them on there. The Fig Leaf is his version, but it's the same thing. Neville T asking us, what are your predictions for the options market for 2019? It's a great question. Kind of don't have time to really do it justice now. I think what we'll do is coming up towards the end of the year, and maybe towards the end of the year, we'll put together an official kind of 2019 prediction show, so we can all go out there on a limb and make fools of each other, which is kind of fun. So it's a good question, Neville T. I think we'll save that for a show where we can do that justice. Maybe make a full show of that. Our buddy Mark Brandt chiming in and says he likes the moving parts on his trade. Well, good. I'm glad you do. It wins often. He said I should trade it and see. You're right. I haven't traded that particular strategy, so I will have to do that and report back to you. But it is, you like your moving parts. Good for you. We all, it works. When it works for everybody, we're happy. If it's working for you, go for it. Good for it. Good for you. All right, let's keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the block. It's another one of those weeks where we're kind of shrugging our shoulders, don't really know what the macro trends are telling us. Are they favorable? Are they not favorable? The micro trends are kind of winding down. Earnings winding down a little bit, so not as much going on there, unless, of course, you like your Costco and a few other retailers after the bell here. So let's go around the horn. Maybe Uncle Mike, I know you were talking at the top of the show about the trade war. It still is top of mind for everybody. Is that what you're watching for the rest of the week into the weekend, sir?
Yeah, I'm watching that along with just the numbers on the SPY. I think those are the things with which we need to watch at this point. This is a market for crazy people. I'm crazy to be a part of it in some way, but just understand it's a market for crazy people. Watch it.
Market. I think we have a title for our show. There's a market for crazy people. I like it. That or mealy mouth soft stuff or whatever it was the meatball said earlier. Speaking of the meatball and saying stuff, Mr. Meatball, what's on your radar for the rest of the week into the weekend, at least until you and I chat again tomorrow on Vol Views?
I'm really interested in how the market acts today and tomorrow. I think that we've seen just a really weird market of falling volatility, falling VIX, falling S&P. It's just not something we normally deal with as traders, and it makes me kind of wonder what exactly is going on here. That would be my answer.
What is going on indeed? A question we all ask many times these days, perhaps more often than usual, as the macro trends blow hither and yon, and the tweets blow hither and yon, and volatility blows hither and yon, and Apple sells off, and it rallies, and everything's mixed, and everything's crazy, dogs and cats, all that good stuff. Unfortunately, that music, listeners, means we come to the end of our journey, at least our first journey here on this Thursday. If you're joining us live, go take a drink, have a beverage, relax, hit the bathroom. Come back in about 30 minutes for TWIFO, This Week in Futures Options. We're going to break down all this fun stuff from a futures options perspective. So we'll talk equities and equity vol, but also probably some crude, some energy, maybe some ags, metals. You never know. I don't know. So don't know who the heck's going to be joining me on that show. It's that time of year. Holidays, everyone's traveling, getting all the people sit down on the host chair. It's always fun. So who knows? Could just be me doing a nice fun breakdown on TWIFO. It'll be a mystery. We'll have to stay tuned. We'll pipe some fun stuff for you in the interim. Maybe you can enjoy a little bit of some time bomb butterflies coming your way in the interim, so stay tuned for that if you're listening live. Meanwhile, let's go back around the horn. Let's start with ye old Uncle Mike. Sir, what's cooking in the land of St. Charles Wealth Management, a.k.a. the land of the Spy Guy?
Well, if you are looking for someone who's not afraid of mealy mouth, or you have questions on potential strategy, because you do have to make some decisions with it being the tax season, the tax time that it is, feel free to contact me. Visit me on my website for more information at stcharleswealth.com.
Trust me, listeners, his website holds up much better than his Skype connection. So don't judge him by that. And Mr. Meatball, same question. If they want to go, they want to do some learning for options, or perhaps they want to get some money management on their end. Where should they go? What should they do?
Yeah, go to optionpit.com and check out what we got going on. We got a couple of exciting things we'll be launching next week. Stay tuned.
A tease. Look at that. Optionpit.com. New stuff coming soon. So stay tuned for that. Optionpit.com is the place to go. And on behalf of the Greasiest of Meatballs and Uncle Mike, a.k.a. Spy Guy, until he's Apple Guy again, or XLE Guy, or whatever else he flips into, SLV Guy maybe. Doesn't really go off the tongue. We'll keep it a Spy Guy for now. And indeed myself, I want to thank all of you for downloading, streaming, subscribing. Again, if you're joining us live, enjoy some Time Bomb Butterflies, and you'll be back in about half an hour to talk all things TWIFO with mystery guests. We'll see. Who knows? And otherwise, we'll see you back here next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.